Happy Tuesday, everyone. We are on our last research case of the entire semester. So it's been a long road, but we got there. Got a few more weeks. I wanted to break down a little bit on our schedule coming up. So I'm sure as you all are aware, we are not in class on Thursday. It's a student research conference day. So we will not be meeting as a class, but there is, I think the submission document for today's assignment is due on Thursday. You can always submit that early, but I still kept the assignment due 2 days afterwards. So even though we're not going to meet for class, that is still due on Tuesday or Thursday. Tuesday, we're going to have our healthcare presentations with our expert. So I had a discussion with him yesterday. I talked you all up. I hyped you all very, very heavily. I said Truman students are extremely good at presentations. They're very, very smart. That is going to be a double-edged sword because he's expecting a lot from you and he's going to ask you some hard questions, but I have no doubt that you will impress. And based on what I've heard and what you all have done so far, I think that will be a very, very thorough evaluation. We talked about some of the things that you can expect from students at other universities, and he talked about like when he was at OU, University of Oklahoma, where we both went, about how people would get up there and just wrote off of cue cards and the words that were in front of them. And I'm guessing that we'll impress them pretty thoroughly beyond well beyond that, as well as our articulation, understanding of complex concepts. So the pressure is on, but again, I don't think you should feel too much stress about it because I do think everybody in this room is going to do well. All right, and then next Thursday we're going to do our final fraud case, and we're also going to have our final quiz. Keep in mind that the quiz will cover material from this week, so you will need to be prepared for that. We have just a bit of separation there. The Tuesday of week 15, we are not meeting as a class. I set that time aside so that you can prepare for your investigation presentations. So we are going to have two sets of presentations, and we'll talk about it in a second. But just basically so you can prepare. Just as a reminder, you are presenting on the case that you developed. And by that time, the submission of the fraud case should be done because it's due at the end of next week and next Thursday, the beginning of class. So hopefully you all are well and truly in depth on the cases and have gotten some work done on that. But that will be starting on Thursday of week 15. We'll also be meeting on finals week, which is unfortunately on Friday of finals week. That was not my choice. That's just how it was assigned according to the date we have on class. Quick note about all the presentations. So because this is a graduate class, I'm not requiring you all to do presentation summaries. Those of you who are in auditing with me remember that we had to do presentation summaries, and that was because I got really, really annoyed one semester that nobody was paying attention to presentations and everybody was just playing on their computer and just kind of sending text messages back and forth, and I got really, really annoyed. I'm not going to insist upon you doing presentation summaries, but I do expect you to be engaged in the presentations, even if you're not presenting on that day. A lot of you are going to have presentations that are taking place in week 15 and you're off the hook for finals week, but I still expect you to be active and engaged in the presentations for the people who are presenting during that week. By the way, just so you know, there was a document where I set up 8 spaces for presentations for the final day of the semester and then 12 spaces for finals week. The 8 spaces for the presentation during week 15 went first. Like all 8 spaces were filled out. So if you did not have your name in there, I put your name in the presentations for the last day of finals week. If you're curious about the order, I just did a randomization function for everybody who was left, and I put you in order. If you have a preference about what day you want or what point in the day you want to present, if you want to present first, early, last, I'm not beholden to whatever your order is in that sequence. But I do want to make sure that you are aware that you have been assigned to a date. If there's any problems, any issues, please come talk to me. We can work through some stuff. But that's kind of what my expectation is now for the presentations. Finally, I had been in the midst of grading cases. So generally speaking, the cases were all very good. I've had a couple of cases that have just blown me away with the effort and diligence that people put into it. So very nice work. I did want to mention a few things. First of all, please make sure that you look for comments. I'm going to finish case grading. I'm about 2/3 of the way through. I'm going to finish case grading sometime tomorrow. Please make sure you look for any comments, even if you don't have a grade yet, simply because there are a few people who submitted documents without supporting materials. If you did not put supporting materials in there, I didn't count off, or I didn't count out the grade off. I just like to see the supporting materials. I think that was mostly a lack of communication on my part, as I did not explicitly request that in the second deliverable. So I will just make a note of that, and please make sure you follow up with that so I can evaluate. Secondly, I want to reiterate something I've said multiple times in multiple classes to everybody. I'm assuming majority of the people in this class use AI. And I've had some people who have explicitly said that they used AI and gave me statements on the depth. I've even had people give me the prompt sequence, which was really cool. It was kind of see how that evolved. If you use an AI tool and you did not disclose that, you are technically in violation of this course policy, okay? I'm not going to insist that you go back and do that, but please make sure moving forward in all your classes that if you use AI, you disclose your AI policy use, okay? Now, can I prove that you didn't use AI? No, but I will say not in this course because you all are really clever. But in a previous course, I did have somebody do a screenshot and it was very obviously from ChatGPT and they did not disclose AI use. And so I had to kind of say, yeah, that's an AI tool. You need to disclose its use. Okay, so and I said the screenshot showing the name ChatGPT at the bottom is not sufficient to disclose the use of AI. So yeah. So please keep in mind that you are responsible for that. That is an academic misconduct issue if it comes down to it. I don't think it was intentional. I don't think anybody was trying to set up like this volume of documents that I put together, Dr. Barnes, 70 pages of documents. I came up with those on my own. If I was like, if you did that, wow. But my guess is most of you did not. That's the case. And that's fine. Okay. I just want you to make sure you're disclosing that. All right, we have our final case. So we're going to be talking about some law issues. So these are kind of the low-hanging items that are still left in the fraud examiner's manual. Some of this is stuff we talked about already. We talked about money laundering last week. We're going to be talking about bankruptcy, which is not a pleasant topic. I meant to actually pull up the YouTube clip from The Office where Michael Scott actually says, "I declare bankruptcy." But I forgot to do that. But I'm sure, given the enthusiasm that most of the people in this room have for The Office, you know exactly what I'm talking about. And if you don't, go watch the clip. It's great. Okay, so let's go ahead and get into this. We'll get through this and get done, and you can go on to greater and greater things. Okay. So 3 types of personal bankruptcy. So what are the differences between each type? So let's talk about each of these in turn. So Clayton, what is the first of these that's listed out?
Chapter 7
Okay, what is Chapter 7?
involves liquidating assets to pay off unsecured debt. After that, the remaining debt is forgiven, essentially giving a fresh start.
Okay, and what type of entity is the Chapter 7 applicable to?
Individuals.
Individuals, yeah, liquidation for individuals. Very good. All right, so what is the second type? Jared?
The second type is chapter 13, and that's reorganization.
Reorganization. So what does reorganization mean?
It's for individuals with reliable income who don't qualify for chapter 7. It stops foreclosure, allowing for filers to keep their homes as well as their vehicles. And the court determines a repayment plan, and then you have to pay back all the debt or potentially lose some items.
Okay, good. And what is the third type that was listed in the document, Cole?
That is chapter 11. It's similar to a 13. It's also a reorganization, but it has no debt cap. Unlike chapter 13 and no income requirements. That's designed for individuals with high debts, but also high incomes, often used by celebrities, athletes, or real estate investors.
Okay, here's the deal. I thought chapter 11 was for corporations. What's going on here? Chapter 11 for individuals? This is a newfangled thing that's only come up in the past few years.
Possibly.
So chapter 11 is very, very common for large entities, but this has become increasingly common, especially as Cole pointed out, if we're talking about people with high profiles that have got a lot of assets, but they've also got a lot of liabilities and offset, try to mitigate that. The way I describe it, I don't know all the context, but a lot of people tend to use it as a cheat code. And, there's definitely going to be legitimate reasons for that. I think that there's people who filed for chapter 11 that have not had legitimate reasons. I'm not going to mention any names, but one of them might be president of our United States right now. Yeah, anyway. So just calling it out. So, I'm going to edit that out of YouTube. So I don't want anybody coming after me. Anyway. So yeah, it's important to note there. Second resource. So what constitutes business and investment fraud? Jack D.
This fraud is when scammers ask for upfront cap in exchange for guaranteed future returns, but there is no such thing as a guaranteed return on investment. Some common schemes is a different question.
That's part of the different question, but we'll get in that in just a second. So yeah, basically say, hey, for minimal investment or for even just minimal investment, you could get like 500% returns. Has anybody ever seen like a scheme like that pop up on like the Facebook feed or get an email like that or something like? I mean, again, you all are still just not even really have been submitted to the business world, and I've seen a few heads nod. I get those all the freaking times. Like I get text messages say, "How would you like to? How would you like to earn a guaranteed income?" It's like, well, I already do, so I'm not terribly worried about that. So yeah, it's definitely one of those problems that, especially if you're not informed or you're really kind of in dire straits and looking for a big hit, it's going to be one of those appealing things. That's one of my problems with these types of frauds is they tend to prey on people who are already in bad circumstances. And I think that if you're gonna commit fraud against somebody, do it somebody who's already successful. Okay, somebody who can afford to take the hit. Like steal my money. All right, I'm okay. Okay, don't steal my money. All right, but anyway. So what are some common scams surrounding business and investment fraud? Alex.
Some of the common scams include advance fee schemes, Nigerian letter or 419 schemes, Ponzi schemes, pyramid schemes, and telemarketing and fraud schemes.
Yeah, so this is another one where I could put multiple clips of The Office together because there were multiples of these in the TV show. So advanced fee schemes, we're actually going to talk a little bit about that because I've got an example that I wanted to talk a little bit about. The Nigerian letter of 419 schemes, those emails saying, "Hey, I need your help. If you provide a minimal upfront distribution, then I promise I will give you because I'm the Prince of Nigeria." And then we've got the Ponzi and pyramid schemes, which we're going to talk about in a lot more depth next Thursday. But basically, kind of where there's well, we're going to do a little more detail because we're going to talk about the difference between those. And then telemarketing fraud schemes, basically where somebody calls you or reaches out to you through a text message and says, "We've got a deal for you. This is an opportunity of a lifetime." Okay, third resource. How is money laundering defined? Austin. That was a good, succinct definition. Yeah. So basically taking illegal income, trying to turn it into clean funds that they can utilize for whatever purposes, presumably legitimate purposes. All right. So we talked about these already, but I want to reiterate because this is something that we discussed a little bit last week. What are the three phases of money laundering? Clayton.
Three phases of money laundering are initial entry replacement, layering, and final integration.
Yeah, so we have placement, layering, and integration. We don't really need to go too much in depth on those because we talked about those a lot on Thursday. But again, it's important to note that these are kind of all the transformation process that we talked about and how we take something that cannot be used without being tracked and to turn it into something that could be used. Now, I have an example of this, and I think everybody else had to develop an example, but we'll talk about that in just a second. So according to the ACCT Fraud Examiner's Manual, there are numerous fraudulent bankruptcy schemes. So if you go to the ACFE, then you can kind of look where you can see asset, plan bust out, and multiple filings, so on, credit card bust out, forged filings, and typing your service petition bill. So kind of a good summary. I know that there's multiples of these that are just beyond this, but this is what the ACFE lists. So let's go ahead and see what you all came up with. So provide a few examples of bankruptcies can be used as vehicles for fraud. So Jared, what did your group come up with?
So we said the planned bust out schemes to defraud the creditors, the concealment of assets through fraudulent conveyances, and then multiple filing schemes and petition bills.
Good. So kind of a list of the ones that we already talked about. All right. So pick one of these. I'll let you choose which one. Which one of these do you think, or which one of these do you think is kind of interesting or innovative from your own personal perspective? Like if you were to commit a fraud, which one of these would you choose?
I really know what it means, but the planned bust out seems.
So has anybody ever heard of the musical or the movie Producers? So if you've never heard of Producers, first of all, it's fantastic. Okay, it's a little bit of story. Basically, you got these two movie producers that are trying so hard to be successful, and they said it's hard being successful. So what we're going to do is we're going to fail, and we're going to create the worst musical of all time. And for it's basically kind of about Hitler, but portraying him in a positive light. So you can kind of see why that's the worst musical of all time. And the idea being is that they were going to get investors and they were going to create this musical for basically nothing, and they were going to declare bankruptcy and take all the proceeds and move out of the country. The problem is the musical became successful. So yeah, and yeah, there's actually a notable number from the musical called Springtime for Hitler. It's so awful. It's I can't even explain how bad it is. But that's an example of planned bust out. They intended to fail and they were going to reap proceeds for that. That's kind of the example of planned bust out. So got to get creative with those frauds, got to write really, really bad musicals, I guess. So yeah, so example of those. So select example of securities fraud that took place within the past decade. So everybody knows securities fraud. We've actually talked about one recently in this course, actually maybe multiples, but one that I could pick out. So, what type of scam did this fraud represent? So, Cole, what was the example that your group came up with?
We looked at FTX. We said they used misappropriation of investor funds by funneling into the related party Alameda Research.
Good. Yeah. So, yeah, it's a kind of spoiler for those of us who are in auditing and going to be talking about that next week. But FTX is definitely one of those ones. So one that I picked and I thought was kind of interesting, and it's not a particularly practical example, but Theranos. We talked about Theranos in this particular context. And I liken this to an advanced fee scheme. And now you may be sitting there saying, Dr. Barnes, this definitely was not an advanced fee scheme. And I said, well, from the context of how we think about advanced fee schemes, you're correct. Okay. It does not necessarily meet all the boxes, but were some ones that have some very common characteristics. So what was Theranos saying? It's saying, we've got this piece of technology that is going to revolutionize the world. We just need some upfront capital. So give us some money in advance, and we will parlay this into a big payoff. Now, the difference being is that I think Theranos had the actual interest in trying to make this a legitimate technology, and they really wanted to change the world. But when they realized it couldn't, then they said, "Oh well, we'll just go ahead and cheat, and we'll go ahead and give these illusory returns." So it meets some basic characteristics. So what are some of the warning signs that we looked at this here? So Cole, let's go back to FTX and talk about the warning signs that you all identified.
So you said lack of corporate governance, just having related parties in general, along with conflict of interest. We also talked about how their audits were pretty inadequate. They didn't go to like a big accounting firm for it. It was a firm that people had really not heard of.
Yeah, so there's a lot of fascinating literature about FTX out there. This is like a personal obsession of mine for like back 2 years ago. I was just really, really thoroughly invested in FTX and curious about that. But if we talk about just accounting in general, FTX had minimal knowledge in accounting practices. And if you know anything about Sam Bankman-Fried, the founder of FTX, he was just kind of like very, 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 very 30,000 foot picture. He was just wanted to see the big picture details and our big picture information and did not pay attention to the details. And so again, a lot of things there. For my example, when we talked about Theranos, so what were some examples in there? Well, what was one of the biggest warning signs? What was one of the big criticisms we had about Theranos with respect to the visibility associated with Theranos's operations? Yeah, they were siloing. They had just no understanding of what was going on with respect to the operations or the financial projections. They didn't have a CFO, so I was curious, where did they get their numbers from? And the answer is they were making them up. There was just no transparency. What about the management of the board of Theranos? Do they have technical expertise? Not really. They were working in a field where nobody on the board had any knowledge of what was going on. And can we say that it was a fun work culture at Theranos? The operations said no, it was a repressive work culture. So a lot of things that we could talk about that are very similar to an advanced fee scheme of this type. So good to know. All right. So you all have gotten very, very good about how to commit fraud. And again, the only boundary that we are creating with this course and how you're learning about fraud is the ethics. But let's just go ahead and bypass those ethical constraints right now. So we're going to teach you how to commit fraud. We're going to be doing some money laundering. So assume you spent the past 5 years providing legal exam materials to Truman State and University instructors. Now you want to ride off into the sunset with ill-gotten gains. Why did I choose that example? No reason. All right. So develop a scheme to launder your fraudulent proceeds. Just sure to explain each phase of the process. So this is where we're going to be talking about the placement, layering, and integration. So what was your example, Jack D?
That since instructors would be giving cash for these exam materials, I would need to pretend that the cash is coming from a business that deals in cash. And so I said good examples would be a hairdresser or laundromat. And then the placement would involve putting the illegally obtained money into the business's bank account and then spending it on whatever to start up the business. And then layering would be running the legitimate business, the hair salon, the laundromat, whatever it may be. And then the integration is after tax income on that legitimate business, whatever is left over being spent in overall.
So use the proceeds to start the business, then run the business, and it gets disguised, and then all of a sudden it comes out. It's clean income. It's clean income they can use. And you could even inflate that by saying that you actually have more sales than you actually have. As long as you're paying tax on it, it's unlikely to be obscured. That's not obscured, unlikely to be discovered. It's going to be very obscured and it's going to be discovered. I also chose to create a business. Anybody want to guess what type of business I chose? Well, you're on the right track. Okay. It's definitely has to do with food. Yes, it's a burger bar, Barnes Burger Bar. Yeah, because you know I love cheeseburgers. Yes, I love cheeseburgers. So, and I said that the problem with my money laundering scheme is that all of the proceeds would go to me buying more cheeseburgers. So that's the problem. That they'd be legitimate cheeseburgers, but they would be coming out. All right. Obviously, all well good to develop fictitious scenarios about committing fraud. However, this activity is only relevant as serves the purpose to educate about fraud prevention and awareness. So I'm not just teaching you all how to commit fraud, but you do need to be able to actually use this for a constructive purpose. Going back to that question, identify some ways that the money laundering scheme you described may be prevented or detected. Well, since Jack, since we're using your example, I'm going to have to call on you again for this one. So how can we prevent or detect your fraud scheme?
Another detection measure would be an IRS field audit, where an IRS agent would come to my house or place of business and assess my standard of living and reconstruct the flow of money from the bank accounts and recognize that the timing is off
Mhm.
from how the business would be. And they could also see that the income coming in or the capital coming into my business wasn't documented. That can raise questions to uncover the source of that capital. And then I said for a prevention mechanism, it's just penalties of committing a crime, whether it's prison time or tax penalties. If someone has any sort of fear of those fines, penalties, consequences, that would be a preventive mechanism.
Good. So we do know that the deterrent mechanisms that we talked about in our previous section are going to be prevention mechanisms. To a lesser degree, we could also talk about transparency in business, whether that be through audit or whether that be through regulatory groups. The problem with really small businesses like a restaurant or a salon or something like that is they're not required for certain reporting rules to actually be that transparent. So that's why they tend to be very, very effective money laundering vehicles. I do want to talk about the detection. So Jack mentioned the IRS. So what groups in the United States are going to be really, really thoroughly involved with money laundering activities? So we know the IRS, that was a good identification. What's another group, a nationwide entity that would be involved in money laundering detection and prevention? The FBI, good. Yeah, the FBI, Federal Bureau of Investigation. There's actually an international agency that also is responsible for this. They were founded in France, but they actually follow or have jurisdiction in multiple countries, including the United States. They're part of this part of a group. Does anybody know what that one is? Well, they're actually a subset of Interpol, but they kind of are under the authority, but they're kind of a separate group as well. So the Financial Action Task Force, FATF, Financial Action Task Force. So yeah, their charge is basically to kind of identify and prevent or prosecute money laundering activities worldwide. So that might be one that would also be associated. Those would be really large in scale, though. Those would be the kind of things like for Binance that would have been detected and prosecuted for Binance or organizations like that. All right. So while many tax fraud schemes are perpetrated by taxpayers, there are some where the taxpayers are victims themselves. How can taxpayers protect themselves from being victims, not willful participants of tax fraud? All right. So I do want to preface this by saying that tax fraud frequently occurs when somebody impersonating a governmental agency, such as IRS, fools a victim into thinking that they are facing punishment and failing to pay taxes they owe. So how can we prevent something like that from happening? Alex, what do you think?
We said first they should use strong security software and unique passwords to protect their personal information. As a stolen security number, social security number can be used by a criminal to file fraudulent return before the taxpayer does, and then is equally important to recognize phishing attempts and never click suspicious links or share personal information to an unsolicited contact.
Yeah. And so those are all good pieces of advice. Now, one problem that we run into, one big issue is the people who tend to be most prey to this are the ones who are not knowledgeable about this. And I'm not talking about people who are uneducated, but people who are just not in their right mind. So the example of this one's kind of a personal sting to me because my father was a CPA for a very long time, very, very, very intelligent man. But in his last few years of life, he was kind of is not right in the mind. He was very, very, he was suffering from dementia, having real problems. We got a call from somebody. It was obviously a fraudulent scheme associated with this, and they basically said, "You owe money to the IRS. If you don't pay it, you'll be arrested." How do we prevent something like that for people who are afraid of that? Because he was paranoid. He was freaking out. He called everybody in the family and says, "We're going to go to jail." And all of us like to joke about it. It was such a terrible voicemail. It was very obvious when you listen to it as a rational human being. It's like, I can't believe somebody would think this would work. It does work on people who are not necessarily the most capable or the most intelligent. How do we protect people like that? I don't have a good answer to that, unfortunately. I mean, I basically said, look, Dad, this is not a real thing. You don't need to worry about it. And it was very, very difficult and very challenging. That is kind of one of the tasks that I would talk about because I'm gonna make a joke here in just a second. But from a very, very serious perspective, think about your responsibility. The responsibility is not to the people who can actually protect themselves, but the people who can't protect themselves. And that's something that we should think about very, very thoroughly as we move forward, especially with our skill set as to how do we actually use that for a greater purpose. All right, but I couldn't leave this on a very, very low note and say, I'm going to talk about my dad and everybody's going to be depressed. Okay, so I had to do this last question here. In your personal opinion, which is the bigger crime, tax fraud or taxation itself? Austin, finishes off here. What do you think? Oh, good, good. What does it depend on? Sorry.
Tax fraud is the only one that's a crime, but the government makes more in tax rate, all the tax frauds.
Obviously, it's more of a joke and kind of a throw off to like here's because obviously tax fraud is the real criminal one. You could actually look at this and say, well, taxation is a problem. I do think that I'm not just saying this because they're sitting in the room. I do think our tax professionals do good work and they're understaffed and under-resourced. But there's sometimes when I look at how much I pay in taxes and I'm like, wow, I really wish I had that money back. But that was a good point. All right, so we're done for today. Again, no class on Thursday. I'll see you on Tuesday for presentations.
Probably.